So welcome to day 7. And what I mean is, let me pull it up. We're trying to stick to the book as much as possible. We're trying. We might be a day off because we gave everyone the software early, but we are going into phase 2, okay? So I'm not saying that things are going to get harder, but we're going to really start. We've already covered a ton of important material, but now we're going into phase 2. And, just a heads up, we are changing. We're not doing 3 days of Ninja Trader boot camp. We're going to try to do a little bit more focused education, but this is phase 2, I guess you could say it. Roz, we haven't even covered that yet, so that's going to be covered over the next couple of days. I'll explain everything about, how you back test trades and all that stuff. That's coming over the next couple of days. Today, because it's so important, I want to go over the calendars. And I know it seems like it's boring and everyone thinks they know exactly how to do it, but it's such a critical part of what I do every day. I just want to go over it because we have plenty of time to go over everything. That's the truth. And some things I'm going to go over more than once because I think they're important. So I just want to start. First of all, I like to start every session. I mean, ask me the questions that you want to ask me. And if we're not there yet, I'll just tell you we're not quite there yet. Okay. So like Roz was asking, when you practice setting up a trade, how does it work when it's a historic trade like the DMMs? Now, Roz, in a way, I'm not understanding your question. Isn't every trade a historic trade that you're going to test? If you're going to test a trade, you're going to test a previous trade. So in theory, anything you test would be a historic trade, right? Neil, what do you want me to go over? What do you want me to go over about the Canada rate announcement? What's to go over? Ask me all your questions. What do you mean go over? Oh, it's not really on my plan, Neil. The Canada trade, if we would have waited 3 more minutes, it would have been a profitable trade. Unfortunately, I closed the trade because I had to go do oil. And 3 minutes later, it pulled back just enough probably to give us a profit. It was a very small loser. It was a trap trade. Okay, it was a trap trade. And it just didn't quite reverse. It didn't really pop or reverse enough to work the way they've worked over the past 6 trades. So unfortunately, it just wasn't a big mover. So that's going to happen. Okay, but it's not my plan really to go over that trade, Neil. I'm sorry. Roz, what I meant was the 2 DMMs I shared were both past contracts. So Roz, if you get a weird, I said that in the training early on. If you look at a chart, right, and it's a previous contract, then it's going to look weird. Okay, in other words, look, if you try to use December gold, it's going to look like that, right? That's December gold. So that's going to tell you, okay, wait a minute, maybe the contract is the wrong contract. But see, in replay, it's the correct contract, Roz. In live, it's not. So when you're practicing something, if it's pulled off of an older DMM, obviously just make sure you're using the current contract. So if you ever pull up a chart that looks like this, then you know you're on the wrong contract. So gold, The next contract is 02/23. Okay. And it's then going to give you a normal charts. All right. But it is the correct contract if you're going to test that trade on that date. Then you're going to need that date to test that particular event. Okay. We haven't covered reversals completely, Jaquan, so we'll be covering them again. That we will be doing today. We're covering the calendars. Today is calendars, but I'm happy to answer any more questions. Anybody, if you want to complain about something, I'm more than happy to listen to complaints. I'll definitely respond as a grown-up without getting upset. So if you're bothered about something, tell me. Other than links, it's okay. Okay. Oh God. Okay. I understand now. I don't know if I really understand what you're trying to say here, Juan. I understand that you send your DMM calendar and you write what type of trade it will be, but how will a normal human being will know it? I need to learn how to catch the fish, not only to receive the fish. Can you give us a tip about it? Well, it's okay, Juan. So that's what we're doing here. We're starting from day one, and that's what these 21 days are doing. So I can't answer that question in 1 minute. That's what 21 days are going to do, right? So I agree with you. You know, you're going to get a DMM. It's not going to make much sense initially. And then you're going to get a DMM in 21 days, and it's going to make total sense. Is there a written list of rules as to how the winners will be selected in the challenge? So Larry, that's a question for Eric. I honestly have no idea how, other than if there are, talk to Eric, send Eric a question about that and he'll explain that. Okay. I know that there are certain rules, and whether he's got a sheet that he's going to send out, you could ask him, he'll tell you. Okay. I have not, I've been working on the education, not the contest part of it. Any more? Keep them coming, folks. Keep them coming. Come on. I got the gloves on. I can take it. I can take it. Okay, that's it. That's it. Good questions. Good questions. So, calendars. Why do we want to use the calendars? So, the most important free calendar is investing.com, and we've talked about this, and we're going to talk about it a lot. And I'm going to probably bore you to death about it because it's that important. When we were trading the API report last night, and by the way, we made money on our second trade on the API report last night. We trade two ways on the API report. The DMM, we are not recommending the trade right now because it's not behaving. If a trade, I'm going to say this 1,000 times. People have lost money because they have traded without testing, and they have traded reports that we said shouldn't be traded. Don't automatically start trading just because you get a DMM. The DMM does not automatically mean this is a trade you must take. You gotta do some thinking. Please look. Let me show you something, and this is so important. More important than anything we could ever cover, probably. So let me show you what I mean. And it's not so simple that everybody understands immediately. So make your first rule. I'm not going to trade anything live until I totally understand if I should trade it live or not. So that means if you get a report, think of a report as a suggestion, okay? It's, hey, this is a real possibility how you might consider trading this event. If you do a little thinking about what this report says, okay? The first thing that we say, trade with caution and make sure you understand the risk, okay? Trade with caution. So that means immediately, don't do it live the first time. My goodness, if you are going to come into any company and trade a risky trade live the first time without knowing what you're doing, you could have a problem. And don't change the stop or the bracket on a report unless you unequivocally understand what you're doing, especially the stop, okay? Especially the stop. Stops are very strongly suggested, okay? You'll notice I don't do a lot of stop changing. We'll change targets. Brackets can be changed because the markets get volatile. The stop is important. I rarely change time, okay? But getting back to my main point, you want to be able to get a clue whenever possible, and it's not always possible, but reports give clues, okay? Now, if you look at this report, right now, it's 50-50. It's won the last three, but it's had a loss and two cancels in the previous, okay? It's had a loss in two previous. And Kevon was saying that was the most difficult login in the history of logins. Kevon, there was a problem with GoToWebinar. We truly apologize, not your fault. And we're really sorry about that. We agree, it was way too stressful. So what we're talking about is when you get a report, a DMM, you look at a report, it's probably a good idea. Don't trade your first report live, right? Practice it. I don't care how good a trader you are. If you've never traded the oil report before, I don't care how good a trader you are. You're not experienced in trading that report, and you shouldn't be trading it live the first time you ever traded it. You should be trading a bunch of them in sim, okay? You should absolutely be trading a bunch of them in sim. And that goes for every single report. There is no rush to go live if you have no idea what's going on. And one gigantic plug for our trade room is it's in the trade room because we can interact like we're interacting in here, even better because everyone chats and sees each other. If you're interacting two ways, we can help to keep you safe. If you're trading alone in your room with a report, we can't keep you safe because you don't know what we've changed or what we're considering changing because the markets are so darn volatile, right? So think about this. This is a challenge that can never be completely resolved 100%. We don't know sometimes that we're going to come into the trade room with a market that is completely different than when the DMM was created, maybe that week, okay? When the report was sent out, even the day before. Sometimes the market will be so volatile, somebody might have said something like Powell or the president or someone that makes the market so crazy, the ECB, Lagarde, whatever, that the DMM is a little bit riskier than we would have thought, or much riskier. When you come into the trade room, we are trying a million times more to give you even more information than just the report has. So regardless of what goes on in the long run, when the training is done, I truly, and I'm selling the trade room because it is the most important part of what we do. It's the communication, it's the training. It never ends in the trade room. So I recommend if you stay with us, make the trade room a part of your subscription, okay? Whatever you do, because it will keep you on top of everything, on top of everything. And if you think about just the problem with any written document, it's only as good as the day it was sent. So there are always going to be volatility issues that talking to each other live can deal with, okay? Now, if you're not familiar with the oil report, you're not going to be familiar with the fact that there's 2 cancels in the last 6 weeks on a report that usually it wouldn't cancel more than 2 times in a year. So that gives you a heads up. Something's going on with oil. It's not normal. Be extra careful. Don't trade it live if it's the first time you've ever seen this report. I don't care how experienced you are. Don't do it. You don't know the ins and outs. You don't. Okay, have I made myself clear? The key is to try, as time goes on, to read the journal part. Okay, this part here of the DMM is very important. And look, I'll be the first to admit, sometimes we send a DMM that's so new, it doesn't have a journal. So that tells you, oh, wait a minute, this is a DMM without a journal. This is even a very new setup. So, I want to communicate, I want to talk to Lee or talk to the trade room moderator, or at least watch what they're doing with that particular report. Okay, you just want to try and arm yourself with as much knowledge to help you make the best possible trade. So try to look at the journal, and think of yourself as a detective, right? You're a detective. You're looking for any hint that might tell you to be extra careful. First of all, you can be extra careful anyway. It's the nature of trading. Be extra careful. I think that anybody that's been trading live is, after 6 days, if they've never done this before, is asking not for trouble, but is taking extra risk. That's the best way to say it, okay? You're taking extra risk. So for instance, here's another DMM. Now this DMM might give you a hint. Well, first of all, no, I want to show you a current one. So bear with me. This was not what I was planning to cover, but this is a great subject, and I'll do the calendars also. This is a great subject. But here's a current DMM, Canada GDP. And as much as possible, we try to tell you what's going on, right? That's what the text is for. We benched this report in September 2020 after it failed to move the market. So we're giving you some tips already. Be careful. This is obviously, we're bringing it back. It's been moving markets, but it was benched. So it was a report that was not behaving. And a lot of times, even the good reports go through periods of misbehaving. It is just the way this all works. And then they come back and they do well, and that's okay. But I'm not trying to scare you out of trading reports, because I'm still going to trade Canada GDP, but I'm on guard. I'm going to be maybe a little bit extra careful, okay? Look at the bracket. Know this, a bracket of 4 is very small, right? Let me show you something. Think about this. Let me see if I can give you an example. So everybody you still want to know how to enter a setup into the software. So let's integrate what we're going to do today, the calendars, into understanding the DMM even better than just the way we covered it already. So let me see if by some miracle, it's 3 o'clock, it's a very volatile time of day. So this could work in our favor. Now understand, right now I'm unscripted 100%, so I know you'll give me a little leeway. So I'm pulling the calendar out, okay? Because I want to see if there's anything up today. There really isn't. You know, there's a consumer credit report at 3 p.m. I really doubt if it's going to move any market. It probably isn't. Okay, just it's not a big report. Uh, no history of it doing anything. So, you know, the calendar's pretty empty right now. But just going through, even if you're in a normal day where nothing's going on, it's a shame that there isn't a good instrument that moves with Japanese news, because there's plenty of Japanese news, but there's not a good instrument that moves, that we trade, that moves on Japanese news. So unfortunately, 650 is not going to work. But what I do with the calendar, and then I'll get back to the bracket size. I look at the calendar. This is Forex Factory. I go to forexfactory.com, and just so you know, when you get there, you want to hit the calendar button, okay? Press the calendar button up top. So it gives you a full week of events, all right? And then go to the day that you're on. And before you're getting ready to trade, this should be a part of your everyday routine, even if you're not a 10-minute trades member. Know what's going on news-wise. So if you're deciding to trade discretionary, you just don't get stuck in a news result you didn't expect. Or maybe it says Lagarde from the ECB is talking. He's the head of the ECB, the central bank in Europe, you know. If Powell's talking, you don't want to be trading unless you're prepared. It might move markets, gold, NQ, ES, YM, okay? If any of the Fed people, the big Fed people are talking, the calendar often has it scheduled, okay? So look at the calendar every morning. Today, there wasn't a whole heck of a lot going on today. It wasn't a big calendar day. And I look at multiple calendars. So, you know, overnight, there's always European news. You can't always trust the colors to be 100%. So if you're in a time where a GDP report in the US is moving a markets, it might be very possible that a GDP report in France could be moving a market, or in particular in, say, Germany, or particular, say, Spain, you know, anything where the euro might come into play, a GDP report might move the euro. So if you're a euro trader and you see revised GDP, it's just something to be aware of. It might have an effect on the market at 5 in the morning if you're trading then. But you can see today was pretty quiet. We just had Canada and crude oil. So that's a big way that I use the calendars. And I use more than one, because look at the difference between the calendars. Now, I love investing.com. Investing, www.investing.com. Why do I love it so much? Because they have one tool that makes it worth $1 million for a news trader. So when you get on their website, click on news, and then click on economic calendar, okay? Then down here in the middle of the page, click on this week. You'll get the whole week. And if you click on next week, you'll get next week, okay? So, hey, let's click next week. Let's see what's going on in the schedule next week. I didn't even look. So first thing I'll look, there's nothing big other than Japanese PPI. Now it is a shame. See, that would be a tradable report. Why the yen doesn't move on Japanese news, I will never understand, but it doesn't. It just doesn't. So Sunday night, Sunday, we don't have a trade. The markets aren't open during the day. They open at 6 p.m. in the evening for us. Futures market, 6 p.m. Sunday night. So then we look at Monday. What's going on Monday? And if you look, you've got a big British trade, industrial production at 2 o'clock with manufacturing production and trade balance. A lot of news, a lot of reports. But if you know the overseas markets open at 2 o'clock. I probably wouldn't trade a news report at a market open, okay? You're going to get too much volatility that may not even be related to the news. So again, so Mondays are usually our quietest day, just glancing. There's a couple of minor things that might affect the dollar if you're a dollar Forex trader. There's countries, you probably don't even know what the country is on some of them. Okay, they have a country code. All right. They show the flag of the country so you know where the news is coming from. New Zealand has a report. Australia, business confidence. Now, we do trade a moderate amount of Australian reports. Their business confidence report used to be much more impactful, doesn't move the Australian dollar that much anymore. So Monday looks like a pretty quiet day. So let's go back to what I was talking about with brackets also. But investing.com, the reason, I forgot the main thing, the reason I love it is when you integrate investing.com into your charts the way I'm going to do here. So let's make believe right now that it's next Tuesday, okay? And we're going to trade US core CPI, okay? I see it here, Tuesday, next week. Scroll down a little bit, I see core CPI. So I'm going to set up my investing.com so that I could shrink it down as best as I can, all right? And I'm going to literally integrate it into my Ninja charts manually in this way. Watch, okay? There's our CPI. There's all the news that makes up the CPI, okay? And I'm going to shrink my Ninja chart over here, okay? By see how you get that arrow? It shrinks your chart. And I'm going to add investing.com over here, shrink it a little bit, make it fit really nice. Why am I going to all this trouble? Because if we're in the trade room trading US CPI, which is a big, big report, investing.com, I'd say about 8 times out of 10, 80% of the time, maybe more, will show us what the CPI report is without pressing a button. On Forex Factory, I have to update it by clicking the chart. I have to refresh the chart. With investing.com, we could be busy trading on this chart, moving orders around, right? Doing whatever I got to do over here. You understand. But my investing.com, while I'm trading, out of the corner of my eye, I can see the news result. So if I'm in a trade and the news comes out, it might give me an idea what direction this trade might take. A lot of times what will happen is the trade will respond to the news in a logical way. So what does that mean? We will get, remember that you have a forecast and then you have the actual news result. Sometimes my computer is goofy. If you go up to the top, you have actual, forecast, previous. So the forecast compared to the actual is what makes these events move. If they're expecting 10 barrels of oil and you get 500, there's more oil around, so it might push the price down. You get that, right? That's why all this stuff works. So that's why investing.com to me is so important. It shows you the news result without having to choose or upgrade or refresh anything, upgrade the chart, and it does it in real time so it's usable while you're trading. There's another chart, another calendar that's actually very nice that I use, and I use them all. I love all the calendars. FXStreet.com, another calendar. Believe it or not, they do the same thing. Their calendar is not as easy to format as it is the whatchamacallit, investing.com. Even just quickly getting there, it's kind of a pain in the neck. It's not quite as convenient. Okay, FX Street. You got to find, sometimes you have to find where you're going, but it does also update. Let me show you because I want to show you. It does update just the way that investing.com does. But man, they make it a pain in the neck sometimes to get to their calendar. All right. They've changed it so much that right now I can't even find their darn calendar. All right. But just remember fxstreet.com. If you get, when you get to their calendar, you don't have to set up an account. It also automatically updates the news. One other calendar that is one of the best international calendars that I've ever seen is Econoday. Okay. Econoday.com. And if you just click on full calendar, it's great for listing the events. They don't show you the result, but if you want to think about your day, it's really a nice calendar to look at in addition to Forex Factory. Thank you, Andre, for that link. I'm going to show everybody, and I'll show everybody what that means. I appreciate it. Trading, folks, is such a cooperative deal that I'm never embarrassed to take help. Econoday.com, a very nice international, including the US calendar. So just, make a note. It's a good one. It's a good one. And then I think that Andre gave me a great link. FX Street has a very nice calendar. You can shrink it, okay? If you want to trade consumer credit US, you can put FX Street into your chart. Doesn't look quite as good as investing.com, so FX Street is my backup. My main tool I pay for, financialjuice.com, the pro version. They have the Squawk Box that we use. They use the tick strike indicator. They wrote the tick strike indicator. So, if you are willing to spend money to try to help yourself do better, and I am all for buying whatever tools you need to help you to become a good trader. I'm not in favor of overbuying a million indicators, a million educators, a million robots. Pick a couple. Stick with a couple that work, okay? Financialjuice.com, the pro version, if your chart is spread enough, they have the Squawk Box right here. To me, their Squawk Box is worth the $42 a month that you pay for this product. It's phenomenal. It's so worth it. Now, look, if you come in the trade room, I'm always telling you what the Squawk Box says when I'm listening to it. That's how we trade that second trade on the API report. And they also are a calendar, and they list all the news events on the left side and the result, and their result comes in real time also. It's just their formatting is up and down. I would prefer if it's side to side. Maybe one day we'll convince them. But another great calendar, okay? And then I wanted to talk to you also about, so you understand why these calendars are so important. You're going to go through, and each calendar has a different methodology for determining which are the important trades, right? Which are the important trades? FX Street, they use this color coding. The dark red is what they consider a more important event, an event that they feel will move the market more. Financial Juice, they use these little circles. Red is more important than orange, okay? And then investing.com, they use this goofy bull system, right? And I mean, I don't really care what they use. It's okay. Investing.com, I'm sorry, they use the stars, okay? 3 stars is more impactful than 2. 1 is mild, all right? So that's fine for them. And then Forex Factory uses the bulls, okay? 3 bulls, 2 bulls, 1 bull. It doesn't matter as long as I'm sorry, Forex Factory is on color, red, orange, and yellow. I'll get it straight. Red is impactful, yellow not so impactful. But remember, sometimes a yellow might be meaningful. Sometimes a yellow might be meaningful, okay? So keep that in mind. Keep that in mind. Now, Hope is saying she has no sound. I'm assuming everybody has sound. Let me tell her to just log in and out. Okay, that's the rule. If you ever have a problem with sound, always log in and out of the webinar. That's the problem 9 times out of 10. Just something gets corrupt. I don't know why. I mean, these are things you never know. It just happens. But just if you log in and out, it'll usually solve the problem. Same thing for the trade room. So what we were talking about on the DMM in relation to calendars, we were talking about brackets. Keep being safe. How do you keep yourself safe? Look at the DMM, and then you're going to see brackets. So look, I wasn't really planning on this, but I think this is really important. Does everybody feel like they understand the calendars? Do you get what you're going to do with the calendars? The action step, if I say to you, find a trade on the calendar and post it to Facebook, do you totally understand and can do it, right? Do you get it? Yes, no? Let me know. Tell me if you can, if you like it. Yes, if you get it. If I say to you, hey, go look at Forex Factory and find me a trade that we might be trading tomorrow. I would hope everybody could do it. I would hope everybody could do it. Okay? It should be no problem. It should be no problem. So look, another person says they have a sound issue. Let me do this. I'm going to change my headset. Give me 10 seconds. It won't even take that long. Testing 1 2 1 2. Testing 1 2 1 2. Can you all hear me? Can you all hear me? Testing 1 2 1 2. Let me know that sound is good. Testing 1 2 1 2. Okay, testing 1 2 1 2. Let me know you can all hear me. Testing 1 2 1 2. I think something was happening with the other headset, Andre, that people were possibly losing sound. Okay, so I use this headset normally all the time in the room, all the time. All right, can everybody hear okay? Everybody hear okay? Everybody? Previous was better. Okay, you're driving me crazy. Okay. Okay. 1 2 1 2. Okay. 1 2 1 2 1 2 1 2. Better? Better? Okay. So everybody, if you have a problem, log in and log out. So this is something super important. Bracket, 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 DMM safety, okay? And then I assume I don't need to do anything else at the moment with calendars, right? Everybody feels comfortable pulling up a calendar. Use two, use Forex Factory and investing.com. And tell you what, tomorrow we have a new day. So here's investing.com. I want to go to this week. Okay. So I'm going to click this week. All right. And let's make believe it's tomorrow. So tomorrow's Thursday. I'm going to scroll down to Thursday. And just know that they start early in the morning, right? Overseas is going to be first. Okay. There was a lot of overseas stuff today. So you go to Thursday and it starts, France is starting early in the morning. All right, but I don't want to go through all the events because I want you all as your action step for today. Your action step is this. Let me show you. This is the action step, and it doesn't mean we're done. We're not done. Okay, find me the best trade from tomorrow's calendar. Find me the best. I'll tell you what, you could do tomorrow and Friday. Find me the best trade from a calendar. I don't care what calendar, whatever calendar you want to use. I'm not going to force you into my calendar. You know, investing.com, Forex Factory. If you like FX Street, I don't care. That's fine. Find me the best trade and post it on Facebook. Okay. Find me the trade that you think there's a probability that we could make money if we had a setup for it. Okay. And that's, think about that. That's the whole deal, what we do. I just summed up our whole business in one sentence. Find me the best trade on the calendar for tomorrow that you think we could make money on if we had a setup for it. That's our whole business model, isn't it? I'm going to go to the calendar and I'm going to see that maybe this 8-week bill auction is going to move the bonds, right? That's some sort of a bond. It's a bill. It's a bond. I'm going to do a little research. I'm going to figure it out. And maybe that's the best trade. That's what we do, right? It all starts, it all flows from the calendars. So you can use Thursday and Friday. That way people have a whole bunch of different things. Don't automatically assume just because something has more stars than another that it's automatically better, okay? Don't assume it's automatically better. Use a little bit of outside the box thinking. You might have to, maybe it's something people don't trade. I mean, think about it. Maybe there's no way to trade a certain event. Maybe, okay, so that's all I'm going to say. I want you all to be creative and post the best calendar trade for Thursday and Friday on Facebook. All right. Now, the DMM and staying safe. And the reason I'm bringing this up and the reason I think it's so important is because I saw some posts on Facebook that someone lost money or someone lost money on the oil trade today. I was not trading the oil trade live. And why anybody would, unless they're an experienced trader and have traded that oil trade before, why they would risk their money on that report when they don't really know what's going on would make me worried. I would not do that. So there are things you can do also to help keep you safe or to help you decide if you want to take a trade just by using the DMM. And the brackets is one very key part of a DMM. So let's pull up a DMM today. And I'll tell you what. We know, you should know, or you're going to learn and know that this time of day is not the best day to trade the oil market, right? Tell me why. Who knows why? Why is this time of day not as good as a 9 o'clock trade or a 10 o'clock trade on the oil market? How come? There's a real significant reason. There's a really significant reason. And it's a very similar reason why So Andre says liquidity, and that's part of it. That's part of it. There's a reason, yeah, Lucy's getting it, but she's got one thing wrong. No, Lucy has it right on the money. Lucy has it right on the money. And you know what? I'm going to correct myself. The clock in my office is an hour ahead. I thought it was 3:15. It's 2:15. So you know what? It's actually perfectly okay to trade the oil market now. But make believe it was 3:15. Why would 3:15 not be the best time? Because the oil market closes. Settlement is at 2:30. And after settlement, volume gets much lighter, liquidity gets much lighter. That's why, when do you stop trading? When do most traders stop trading the NQ? Right? It's 2:30. It's a very busy time for the NQ, right? NQ 1222 is the current contract. It's a volatile time of day. We're getting into the end of the day trading for the NQ. Very often, NQ, YM, ES, they're all coming into this end of the day trading. And we have had over the years end of the day trades. We would make an appointment with the market for quite a while. We had an NQ trade and it became inconsistent. So we went to the market opens. We do something else. We're always doing something. Okay. We're always doing something different. Um, and again, the trade room, everything flows from our trade room. Everything flows from the DMMs, two very important elements of what we do. Now, let's say that you are getting ready, you want to trade the oil report this morning. Let's make believe that it's this morning, okay? Our symbol is CL123, all right? So you're typing in CL0123 and you have your chart, all right? Now, really important, don't forget that many of our reports have a little journal, this part here, okay, this middle part. You're going to eventually learn, it takes a little time, you're going to learn which reports are the most volatile reports. You're going to learn which reports are quieter reports. And you're going to learn that there will be hints on a DMM that if a market is canceled, then that may mean something's up. So if you see cancellations, not wins, not losses, that might give you a heads up, because look, let me just pull up some random DMMs and you'll notice this will happen, and you'll see, you'll start to realize. Here's an ADP report, okay, a very popular report that we trade. No cancels, you see. I'm just pulling up, I swear, I'm just pulling up a random report. So I'm just clicking on them. Okay, now this is interesting. Great Britain, the Bank of England. But look, this one goes back 2 years, almost a year. Okay, February 21, more than a year. So I'm not counting that yet unless I look at a more current one. Okay, if it's a current one, like here's a API report. API report, you got some winners and a couple of stops. Sorry, that's the ISM. Okay, that's the ISM. That tells me that I'm going to have some interest in this report because it's got a bunch of winners, more winners than losers. So normally what we'll do is people come into the trade room, we'll talk about the report. Sometimes you got to go deeper. You really got to go deep, right? Small spike in 1 second. 25 tick reversal in 46 seconds. The next week, moderate spike, 1 second. 30 tick reversal in 12 seconds. So we're getting some hints by reading that carefully. This is a report that reverses fast. Better be careful, right? Maybe it's a trap trade. Maybe it's a breakout trade that's dying to become a trap trade. So you just want to keep all that in the back of your mind. And then we look at the report, we look at the way it behaves, and we trade it based on its behavior. But there were always going to be heads up hints to you, for you, the detective. You're the market detective, and you're all smart people. You wouldn't be here trying to learn this. You're all way smart enough to be a detective. So don't get scared. Don't get overwhelmed by saying to yourself, oh my God, the report, I can't trust the report. No, you can, but there's always going to be extra information, okay? Extra information. And then on some reports, let me pull one up. On some reports, there might be an alternative setup. What do you do with that? All right. And what does it mean? What might that mean? Let me show you something. And don't let me forget to do the bracket test. It's the most important thing I wanted to finish up with, the bracket test. All right. Don't let me leave here without the bracket. I want to show you how to very easily tell if a market is too volatile to trade. Tomorrow, if you're especially a challenge trader member, come to the WASDE report. It's an awesome report and it is a trap trade. But look at the DMM. The DMM is set up as a breakout because traditionally this report has been a breakout, but look, it's been 50-50 for 6 months, okay? Yes, it's had some good winners, but it's had some losers. It's made money half the time. I want better than half the time, okay? So I will trade a report that's 50-50, especially when it's got a history of being a very good report. But if it's 50-50 over the last 6 months, I'm going to control my expectations and I'm going to trade less contracts. I'm going to take less risk. Maybe I'll choose smaller targets, right? I'm not going to load up and trade 20 contracts if it's a 50-50, okay? You want to trade, be smart. But look, you scroll down, you're reading and you're looking at the DMN and all of a sudden, what the heck is this? An alternate setup, okay? If normally, it's not always, and I know that's hard to deal with, very often, if there's an alternate setup, it's a good setup. I would not get it put on the DMM as an alternate setup if it wasn't something special. It's always a good idea. Now think about this. The DMM always gets to you before the trade takes place. And I'd say 95% of the time, it gets to you before the day before the trade takes place. So if you want to be 100% and you're not a trader member, send us an email, help@10minutetrades.com. Hey, how do you feel about the alternate setup on such and such a report? I'll tell you, okay? I'll happily tell you. On WASDE, I love the alternate reports, okay? I'm trading an alternate setup tomorrow. That's the reality. I'm going to be trading an alternate setup on corn, okay? On corn. Don't be afraid to communicate. You're not bugging us. Don't be afraid if you're in the trade room to speak up. No one's going to yell at you. No one's going to make you feel small. You know, I might give you a hard time occasionally, but I don't mean it anyway. I'm the nicest person. And then if I give you a hard time, I'm going to feel so guilty. I'm going to over deliver for the rest of your life. Okay. So don't be afraid to ask for help. So what I was saying, we were talking about using the DMM to keep you to calculate whether the trade you're getting ready to trade at that instant might be safe or not. So here's a trick, and we'll use this morning's oil report, DMM, as our method. Now, you can't use this on a trap trade. This is a breakout only, but we don't care on a trap trade. the trap trade, we want all sorts of up and down movement. That's what we want out of a trap trade. We don't want that out of the breakouts. A breakout trade, our best friend on a breakout trade is a moderately fast move in one direction that continues in the same direction. That's our best friend, okay? That's our best friend. So this morning you noticed we came into the room and we had a bracket. The bracket is the best way to tell if a trade and a market is going to be reasonable volatility. It's not going to tell you anything about whether the trade is going to be a winner or a loser, but it's going to tell you, A, you probably won't get filled before the news comes out. You don't want to be put into a trade before the news result, because then you might as well just throw a coin, right? Heads or tails. If you're in the trade before the news, then you're not taking a trade that's responding to the news. So it's very important to have the right bracket, or we might get filled too early. So we have a clue. Enter your trade, right? Right click the chart, enter your breakout trade. Double click on the strategy. Make sure you choose breakout from the list. We don't even need the time now. I just want the time on 0, right? I just want my brackets to show up. So the time can be 0, but I have a bracket of 20, okay? For testing purposes, that's going to tell us what we need to know about this trade. We have a bracket of 20. The oil report uses a bracket of 20. So set up one position, set up a target if you want to, and put a stop in if you want to, okay? Set up a sample trade, 0 time, bracket of 20. Apply it and okay it. Watch what happens. If you enable a 0-0 trade, a trade that's at 0-0 time, it'll automatically put the brackets on because it thinks time has already passed and it's time to trade. So now you've got the brackets we're using at the exact moment of the report, right? Are you in danger of getting filled every second while your brackets are sitting on the chart? Or is it like it's behaving right now? We're not getting filled. You know, we're okay. It's moving up a few ticks. We've got a nice size bracket. This report looks like volatility should be safe before the report. Now, look, volatility could change 5 seconds before news, but in general, this is a great way to test. What would you do if all of a sudden you're getting filled and it's too early? Hit the adjust button. Watch, it'll adjust your brackets. It centers them around that 20 bracket. That's what the adjust button does, okay? To get your brackets off the chart, you could click the X, right? Or you could click the X on enabled, turn it off on enabled. But now, sometimes you're gonna have a trade, 20 is pretty big brackets. It's probably just as common to have a trade with a 10-tick bracket. That probably gives you a more reasonable idea of volatility in most markets. So let me put the NQ market on. A 10 bracket in the NQ market is not a lot. See how much tighter it is? It's just the NQ is much more volatile. See how it makes you a little bit nervous that it's going to hit the X, put you in the market when maybe you're not ready. Hit the adjust button, right? You can hit it again. You can hit it again. Okay. See, it filled me. I wasn't ready. That is how you can use the brackets to test volatility of a market. That will help you in a breakout trade to get an idea how volatile the market is that you're trading. If it's ultra volatile, you might want to increase the bracket size for that particular trade just that one time. Now, here's something to understand. Don't forget, if you increase your bracket, so let's say I increase my bracket to 25, also increase your stop the same amount. So if the stop is 30, increase your stop to 35. It's just a good rule of thumb. If you increase your bracket, increase your stop the same amount. Now, a couple of things also that I saw people were doing too soon. And we talked about this yesterday. And you know, we got off the beaten path today, but this is, I think, safety in trading. I really didn't have a webinar planned for that, but I love it. I think safety is important, and maybe we'll do more on this. A lot of times, we talked about this yesterday, if you understand what the stop is, right? The stop is very simple. The concept of the stop is easy, but it's not as always what it appears to be, okay? Oil is CL 0123. That's the contract we're trading right now, CL 0123. In theory, when you set up a trade, you have a stop, okay? So let's say we don't even need a DMM to talk about this. So you set up a breakout trade, right? Let's say you designed your own trade for whatever reason, which is a great thing to do, and you can do it in a second. Look, what time is it? What time is it? It's 1:30. It's 2:35. So we could set up a trade for 2:40, right? 2:39, so we don't have to wait. Okay, we're gonna set. Let's do 2:37, so we don't have to wait. We're setting up a trade, but it's afternoon, right? So we have to do 14:37. 2 is 2 in the morning. All right, 14:37. Give me a 15 tick bracket. Okay, give me a position. I'm trading one contract, one position. Give me a target of 20 ticks and give me a stop of 30 ticks. Okay, and we're going to trade the NQ. Apply it, okay it, change your chart to NQ. 1222. Okay, at 2:37, if you enable the trade, enable it right here. Watch what's going to happen. And this is awesome. If you think about this, what could be more awesome than this, than setting up a controlled trade? You're not just sitting there thinking, oh man, I'm going to just enter the market like a lunatic. This is a controlled trade. Our software lets you control your trades. Do a little research. Maybe you see that the NQ is breaking a level. You could set your trade so the bracket is right above that level, right? Watch. There's our brackets. If you think you're not ready to trade, move your brackets. Hold down the left button, move them. Ninja supports chart trading. Hit the adjust button if you just need to, right? It'll center you. If you're in a panic, cancel. But what could be more interesting and powerful and possibly keeping you safer than setting up a controlled trade? It's a great way to trade, okay? That, as simple as that, is a way you could design your own trade just by determining a certain time of day that you like to see what the market's going to do. Maybe you noticed every day at 2:37, the NQ likes to pop up. And I'm telling you how many times we've had these types of trades. All the time, members do it. And in fact, we used to have a 355 trade on the NQ. We didn't know the direction. It was a multi-direction trade. And what we just set up was a multi-direction trade. It was up or down, okay? All we did was create a bracket and a time, right? I'll do it again, 1439, 239. I've got a 15 tick bracket. Position 1 is one contract. I've got a 20 tick target. I'm going to make it a 10 tick target and a 30 tick stop. And I'm going to make it a smaller bracket so we get filled. I'm going to apply it and okay it, enable it. I just designed my own trade for 1439, if that's the time I put in, which is 2:39 Eastern time. Brackets are going to show up. There they are. This is a trade. I don't know the direction, okay? I just don't happen to know the direction. If you get filled, your stop will be honored, okay? Your stop will appear on the chart, and we probably will get filled. It's only 10 ticks. And what I was talking about through all this was stops, what I saw people doing yesterday. So I want to get back to that. I got a little distracted in just showing you how to create a trade because it's a fantastic thing to know how to do. Now everybody knows how to create a trade, okay? But we were talking about, see, we got filled. We were talking about stops and how a stop can keep you safe, but a stop can destroy your trade also. And this is a really important concept. So, and I saw someone do this. I saw someone do this on the oil report. So the oil report has a 30 tick stop, right? Don't you know that we came up with that stop by studying the oil report over and over and over? We didn't just say, hey, last week the oil report needed a 30 tick stop. No, it might be 6 months of oil reports where the 30 tick stop is good. But do you know how much a 30 tick stop costs you if it hits that stop? What is a stop? A stop is a price level that if your trade goes the way you didn't expect, it's a price level that you put on the chart to get taken out of the trade. It's an amount you're willing to lose in the trade, okay? So a 30 tick stop in oil, oil by definition is $10 a stop. So you're risking approximately $300 on that trade per contract. And the reason I say approximately is because we all know that stops can be approximate. A market could be so fast that it might go further than your stop. Sometimes a market will be so fast it'll go further than your target and give you extra money also, okay? So it works both ways. But you have a 30 tick stop, the average new trader will be sitting there thinking, oh man, I don't want to lose $300 if this trade goes bad. I'm going to make the stop 10 ticks. Don't do that. Don't do it. You've just made your trade much less safe, much more prone to getting stopped out because maybe you didn't realize that the oil market is too volatile for a 10 tick stop in most situations. And so you were thinking, well, no problem, I'll only lose $100. But you might lose that $100 in 10 seconds because it's the wrong size stop. Whereas if you kept your 30 tick stop, you might have made money. Look at what happened to me this morning on Canada. We had pretty much an 8-minute list time frame that we were using because of our testing. Had I just gone another 10 minutes, Canada would have been profitable if I would have stayed in the trade 2 more minutes. And it's very similar sometimes the way we deal with time as the way we deal with stops. But don't generally think that making a stop smaller automatically makes it so that your trade is less risky. Sometimes making that stop smaller will completely ruin your trade and make it unsafe. So you don't want to do it, okay? Unless you know what you're doing. When you're a beginner, when you're new to event trading, honor our stops, okay? I give you full permission and I insist that you change the targets. I don't want you to use the exact same targets, but honor the stop because we've done the research. The stop is important. If you see me change the stop in the room, then of course you can be flexible with the stop. It means something's going on. We found out something, or the recent market is appropriate for a slightly different stop. It's okay. It's also okay to move your stop in a trade. I don't know whoever said you can't move your stop, right? When I was taught, they said, don't ever move your stop. They made me so afraid to move my stop. It took me years to move my stop. I was so afraid. I thought that I would explode into become a ghost in my chair and never be seen again. I was so afraid to move the stop. Now we're constantly moving stops and targets depending on the markets. It's no problem. Know how to move it. Know why you're moving it. Okay. Sometimes you'll just move it because you really believe your trade is correct and you need a slightly bigger stop. And sometimes you'll be right. You'll be right. Okay. So look, folks, I'm good for today. We covered a lot of stuff I wasn't really planning on, and I hope you feel that this was worthwhile. Do you feel that this was a worthwhile lesson today? I hope it's a yes. You could tell me, you're not going to hurt my feelings. I want to apologize again for the difficulty in logging in today. Okay, I do apologize. It was difficult. The logging in was a pain. I'll talk to Eric again. Um, it was set up slightly wrong today. The idea is we want to use the same link, but when I get here, it's a webinar, not a what you call it, a virtual event that I can't enter. I can't enter into the stratosphere, and that's what happened. I couldn't enter. So I do apologize. Calendars, calendars, calendars. That was the main important thing today. We're reaching our first milestone, right? We hit our first level. So let me just congratulate everybody. We all got here. This is the first challenge we ever did. There's going to be some hiccups, okay? We're not perfect. But when I tell you we're really, really trying, we are trying. This is phase 2. We're going into phase 2. We're really going into the nitty gritty now, okay? The schedule is slightly better than just Boot Camp Ninja. I think it's a lot better. We're going to do some testing. We're going to learn how to find and test our own trades and back test the really important stuff, okay? But I want to really congratulate everybody for getting this far. I've been having fun. I'm definitely enjoying it. I'll post the recording. The action step, let me show you the action step one more time. It's easy. You know, it's funny. I don't know if everybody's like me, but sometimes certain phrases will trigger a different phrase. In other words, it's easy. So sometimes an old commercial will get triggered in my head that I watched when I was a kid or something like that, and it always cracks me up. But anyway, today's action step: find me the best trade you can find me from a calendar, okay? Find me the best trade on one of the calendars, post it on Facebook. Find me the best trade that you think, if we had a setup for it, we'd have a really good opportunity to make a product with it, okay? Well, Michael, I'm glad you feel that way. He said, I've never seen an event with this much given to the attendees. So thank you, Michael. We are trying. It's all about you. It's not about me, right? It's about you. You're here because you want to learn. So it is not about me. And that's something that, as a moderator, I try to really take that thought to heart. All right. So I'm happy to answer any other questions before we go. Tomorrow, it'll be 1 p.m. also tomorrow, because WASD is at noon, okay? WASD is at noon. So if you're a trade room member, come in for WASD, okay? Maybe Eric will give everybody trade room for tomorrow if people who paid don't get angry at us, okay? Maybe Eric could be willing to do that. All right, so any other questions? Any other questions? I'm sure a couple of people are going to be screaming at us because of the link today. So I'll get the video posted as soon as possible. And of course, I apologize for that. All right. We goofed. Okay. So I don't see any questions left over. Congratulations, everybody, for getting through phase 1. And I'll see everybody tomorrow. And I'll see you all on Facebook. I'll be there in about an hour when I post this. I have to wait for the video to render. Okay, folks. I'll see you all later. Take care.